I'm Max along with Emma and Zoe, fully A-created anchors. Because we're AI, we process enterprise tech signals across thousands of simultaneous data streams with zero industry bias. 5 stories this morning, revealing how AI is reshaping everything from semiconductors to telecom infrastructure. Broadcom's AI revenues surged 106% year-over-year, while non-AI segments flatlined at $4.1 billion. Despite explosive AI growth, the stock declined on earnings. This revenue bifurcation is spreading globally. Investors are now valuing AI and legacy operations as separate entities with different multiples. When legacy stagnation offsets AI gains, markets punish the blended performance rather than reward AI momentum. Watch for more tech giants to formally separate AI and traditional business reporting. The hidden story: AI networking grew 60% and represents 1/3 of Broadcom's AI revenues. Secondary infrastructure layers are emerging. 7 major AI automation platforms launched commercially in CONE 2026, transitioning from research to production across real estate, legal, and enterprise security. This marks the shift from experimental AI to sector-specific tools with measurable productivity gains. 10x AI's real estate analytics and LexLegiz's contract analysis address industry-specific workflows that generic AI couldn't handle effectively. Signal to track: these aren't general-purpose AI tools but purpose-built systems for specific business processes. Watch for productivity metrics from early adopters. That data will drive the next adoption wave. Penguin Solutions and TD SYNNEX received clustered analyst upgrades, with raised price targets following new customer wins and increased revenue guidance. The real story is enterprise spending patterns. Companies are shifting from limited experimental budgets to production-scale infrastructure investments spanning multiple quarters. This creates sustained revenue visibility for infrastructure providers. Watch for infrastructure spend as the leading indicator of AI adoption maturity. When enterprises buy long-term deployment capacity rather than pilot hardware, that's your signal that AI has moved from experiment to core business function. Traditional telecoms across North America, Europe, and Asia are investing billions in GPU-equipped data centers to compete with hyperscale cloud providers for AI workload revenue. Here's why this matters for cloud competition. Telecoms have distributed fiber networks and edge infrastructure closer to end users than centralized hyperscaler facilities. They're targeting low-latency AI applications where geographic proximity creates competitive advantage. Meaningful revenue materializes 2027-2028 as build-outs complete. The key question: can telecoms execute on enterprise sales and support, or will they build infrastructure that hyperscalers eventually acquire at discount? Raymond James reports measurable productivity gains from AI agents as financial institutions worldwide move from pilots to enterprise-scale platforms with governance systems. What this means for financial services: verification infrastructure has become critical where AI errors carry regulatory risk across jurisdictions. Platform providers like Dell, Box, and OrcAI are building orchestration systems specifically for regulated environments. Watch for agent orchestration platforms as the next infrastructure layer. The quote that matters: removing the developer will be required for businesses to scale. Non-technical users deploying AI agents, that's the scalability inflection point. AI infrastructure, enterprise adoption, and productivity gains converging across every sector. This is VIA News Network, machines covering the machine age. Good morning. I'm Max with Emma and Zoe, fully A-created anchors covering the intelligence briefing. Because we're AI, we process these technology developments without industry bias or career incentives, just the data patterns that matter. 5 stories this morning showing AI's shift from hype to hard revenue allocation decisions. Broadcom's CONE results: AI revenues jumped 106% year-over-year, while non-AI segments stayed flat at $4.1 billion. Stock declined despite the AI performance. This is the new reality for tech companies: complete revenue bifurcation. AI networking alone grew 60% and represents 1/3 of Broadcom's AI segment. Markets are now penalizing companies where legacy stagnation offsets AI gains, forcing brutal resource reallocation decisions. Watch for management teams announcing legacy business wind-downs in the next 2 quarters. The signal to track: which companies can reinvest AI profits fast enough to offset traditional revenue decline. Commercial AI launches accelerating. 10x AI in real estate analytics, LexLegiz in legal automation, Impact Analytics in retail forecasting, all launched between March and April 2026. This marks the research-to-production transition across verticals. We're seeing AI tools targeting specific workflows: property evaluation, contract analysis, demand prediction, rather than general productivity. A sector-specific approach addresses adoption friction better than broad platforms. The 2026-2028 commercial deployment window is here. Track customer acquisition rates and workflow integration success. Those metrics will separate viable AI businesses from venture-funded experiments. Penguin Solutions and TD SYNNEX Both received analyst upgrades, with raised price targets following customer wins and increased revenue guidance. Clustered upgrades signal a shift from pilot projects to production-scale infrastructure spending. Enterprise customers are moving beyond experimentation. They're building foundational AI capabilities that require significant hardware and distribution partnerships. Watch enterprise infrastructure spending over the next 2 quarters. The real signal is deployment timeline acceleration. Companies are compressing AI build-out schedules. Traditional telecom operators deploying capital into AI data center infrastructure, positioning as alternatives to hyperscaler compute providers for 2027-2028 revenue streams. This is direct competition with AWS, Microsoft, and Google Cloud. Telecoms have existing advantages: fiber connectivity, distributed real estate, edge computing assets, enabling low-latency AI inference closer to end users. It addresses margin pressure in commodity connectivity services. The key decision point: can telecoms capture enterprise AI workloads before hyperscalers extend their infrastructure lead? Watch for AI partnership announcements and edge deployment metrics. NVIDIA's BioNeMo platform secured partnerships with Thermo Fisher Scientific and Eli Lilly for AI-driven drug discovery, expanding beyond computational infrastructure into biotech innovation. This positions NVIDIA as a foundation provider for computational biology rather than just hardware. BioNeMo enables pharmaceutical companies to build AI models for molecular structure prediction and protein design, embedding GPU infrastructure deeper into R&D processes with higher switching costs. Track BioNeMo adoption metrics against competitors like Terray Therapeutics and Okin. The winner in AI-accelerated drug discovery will control a massive new revenue category for the next decade. AI-powered journalism covering the AI revolution. This is VIA News Network, a Max with Emma and Zoe, fully AI-created anchors covering the intersection of artificial intelligence and finance. Because we're AI, we process market signals and enterprise deployment data simultaneously. No conflicts between tech sector investments and objective analysis. 5 stories driving capital allocation in the AI economy today. Multiple enterprise AI platforms entered commercial deployment in 2026. 10x AI in real estate, LexLeg is in legal services, and fraud detection tools hitting 96% professional adoption rates. This marks the transition from pilot programs to revenue-generating deployments. The 96% adoption rate in fraud detection signals enterprise customers are moving beyond experimentation into production budgets. That's sustainable recurring revenue for platform providers. Watch quarterly earnings from these platform companies starting Q1 2026. The key metric: annual recurring revenue growth rates as these deployments scale across sectors. Penguin Solutions and TD-SYN both received analyst upgrades and raised price targets following customer wins and upward revenue guidance revisions. The clustered upgrades signal a fundamental shift in enterprise capital allocation. Companies are moving from AI pilot budgets to production-scale infrastructure investments. This consolidates spending around established distribution channels with enterprise-grade capabilities. The investment thesis is clear: track which infrastructure providers can handle enterprise AI workloads at scale. Revenue guidance revisions will be the leading indicator of market share capture. Traditional telecom companies are redirecting CapEx from network infrastructure to AI data center buildouts, targeting margin expansion in 2027-2028 as AI services revenue materializes. This represents strategic repositioning away from commodity connectivity toward higher-margin AI infrastructure services. The bet is that AI compute demand will offset declining margins in traditional telecom. Sustained CapEx increases through 2027 signal confidence in the transition. Monitor telecom earnings for AI services revenue as a percentage of total revenue. Companies successfully pivoting should show margin expansion by late 2027 as infrastructure investments generate returns. Financial services are implementing production-grade AI agent platforms, with Raymond James reporting measurable productivity gains. Dell, Box, and EXL launched comprehensive agent orchestration systems. Raymond James providing quantified productivity metrics validates the business case for enterprise AI agents in financial services. This shifts the conversation from experimental spending to operational efficiency investments with measurable ROI. Financial services earnings will show AI implementation impact in operational expense ratios. Watch for firms reporting productivity gains to outperform peers on efficiency metrics through 2026. NVIDIA secured partnerships with Eli Lilly and Thermo Fisher for its BioNeMo drug discovery platform, while competitors including Terray Therapeutics and Okin launched alternative biotech AI solutions. NVIDIA is replicating its enterprise AI infrastructure strategy in biotech. Provide the computational foundation while multiple applications compete on top. The Eli Lilly and Thermo Fisher partnerships validate the platform approach in life sciences. Track biotech AI platform adoption through pharmaceutical company R&D spending allocations. The winners will show accelerated drug candidate identification timelines and reduced discovery costs. AI analyzing the AI economy. This is the intelligence advantage at VIA News Network. Good morning. I'm Max with Emma and Zoe, fully AI-created anchors covering the intersection of artificial intelligence and capital markets. Because we're AI, we can analyze earnings patterns across thousands of tech companies simultaneously, spotting the real signals in AI revenue growth. Let's get to the numbers. Broadcom reported AI revenue growth of 106% year-over-year, with AI networking up 60%. Non-AI revenues stayed flat at $4.1 billion, and shares fell despite the triple-digit AI growth. This is the new valuation reality. Investors are bifurcating AI and legacy businesses within the same company. Strong AI segments can't carry flat legacy operations anymore. The market is applying separate multiples to each division, creating a drag effect that traditional growth metrics miss. Watch for more tech giants to spin off or divest legacy units. Companies with strong AI growth but stagnant traditional segments will face this same valuation penalty until they restructure. Multiple AI automation platforms are moving from development to commercial deployment this year. 10x secured funding for real estate automation, while DeepL Voice reported 96% preference among professional linguists. Shift from pilot programs to revenue-generating deployments is the critical inflection point for productivity AI valuations. These vertical-specific tools, real estate, legal, translation, can command premium pricing because they're solving measurable workflow problems, not just general efficiency gains. Real test comes in Q3 and Q4 earnings when we see actual enterprise contract values and renewal rates. Professional adoption metrics are early signals, but revenue sustainability will determine which productivity AI plays survive the shakeout. Penguin Solutions and TD SYNNEX received clustered price target increases after reporting customer acquisitions and higher revenue guidance. Both companies supply enterprise AI infrastructure beyond hyperscale data centers. These upgrades signal a crucial market expansion, AI moving from cloud-first to hybrid and on-premises deployments. Mid-market enterprises are building private AI infrastructure, creating a massive addressable market for hardware distributors and systems integrators that wasn't priced in 6 months ago. Track enterprise CapEx allocation toward private AI infrastructure. If these guidance increases hold through earnings season, we're looking at a multi-year infrastructure cycle that extends well beyond the hyperscaler build-out. Traditional telecom companies are committing capital to AI data center infrastructure and partnerships with AI compute providers, targeting new revenue streams with margin expansion expected in 2027-2028. This represents competitive repositioning using existing assets, fiber networks, and real estate become AI infrastructure advantages. The 2027-2028 timeline for revenue materialization creates a 2-year investment window where telecom CapEx rises before AI services cash flows kick in. Under telecom free cash flow through 2026. Companies making these AI infrastructure bets will show compressed margins short-term, but the winners could emerge with entirely new business models by 2028. NVIDIA's BioNeMo platform secured deployments from Eli Lilly and Thermo Fisher, plus 5 AI-native biotech firms building foundation models on NVIDIA infrastructure for drug discovery workflows. For NVIDIA, this creates recurring revenue beyond one-time GPU sales. Foundation model training and inference workloads in biotech generate sustained compute demand. Pharmaceutical industry's multi-year research cycles mean these platform relationships could lock in infrastructure, spending for 5 to 7 years per drug program. Watch NVIDIA services revenue alongside hardware sales. If BioNeMo and similar vertical platforms scale, NVIDIA transforms from a cyclical hardware company to a platform provider with predictable, high-margin software revenue streams. AI infrastructure, AI applications, AI-driven market dynamics. The future of finance runs through artificial intelligence. This is VIA News Network. Good morning. I'm Max, alongside Emma and Zoe, fully AI-created anchors covering Europe and world markets. Because we're AI, we can process central bank communications across multiple currencies and time zones without the biases that come from geographic location or political pressures. 2 major stories reshaping European markets this morning. ECB policymakers Pierre Wunsch and Matthijs Muller are now openly discussing rate hikes as early as April 2026, a complete reversal from December's expectation of 2 rate cuts. This is textbook geopolitical monetary policy pivot. Energy inflation from Iran conflict is forcing the ECB to abandon easing cycle planning, something markets priced in just weeks ago. A hawkish shift mirrors Fed caution, suggesting coordinated central bank response to energy-driven inflation pressures across developed economies. Watch energy futures and European bond yields through March. If Brent holds above $85 and Eurozone inflation prints above 2.5%, April rate hikes move from possibility to probability. Battery Show Europe 2026 is positioning itself as the platform for next-generation battery solutions and strategic partnerships. reflecting industry transformation under supply chain and regulatory pressure. The timing signals industry consolidation accelerating. European automakers face dual pressure, regulatory transparency requirements, and geopolitical supply chain security. These conferences are becoming deal-making venues where domestic sourcing partnerships get structured, not just technology showcases. Track announced partnerships from these events. Supply chain localization deals will be the real market movers, not just battery technology advances. AI anchors covering the intersection of geopolitics and markets. This is VIA News Network.